Why are so many landlords getting it wrong right now? Our CFO doesn't hold back.
The mistake that landlords make quite often is underestimating risk and cost. We have a Labour government that is anti-landlord, I would say, where the UK's housing market is heavily predicated on raising debt. Landlords become very susceptible toward cost of borrowing.
Today, we're revealing the real financial risks, the math behind guaranteed rent, and what most landlords never factor in.
Caridon was one of the first companies to pioneer the idea of guaranteed rent. We have over 2,000 properties. We pay immediately on the month, every month, as per our guaranteed rent contract. I know we've been buying properties for 20 years. There isn't a property today that is worth less than it was 25 years ago. Fact. For me, yesterday was probably the right time to buy. The more deals you do, the more information you carry into your next deal.
Whether you own one flat or 100, this episode will change how you think about risk, returns, and guaranteed rent. Hello, and welcome back to the Caridon Weekly, the podcast for landlords, investors, and property professionals looking for honest insight and real value in today's market. Now we know a lot of landlords are feeling the pressure right now. Rising costs, tighter regulation, uncertainty around interest rate. It's a lot. So we thought, who better to speak to than someone who's right at the heart of it? Joining me today is Abbas Alidina, co-founder and CFO of Caridon Group. With 20 years of experience in real estate finance, he helps secure major institutional funding, and he also works closely with landlords every day to help them protect their investments. Abbas, great to have you here.
Thank you for having me on.
To get us going, for anyone who hasn't met you yet, can you give us a quick overview of your role at Caridon?
Yeah, sure. So thank you. And as you mentioned, my title is a CFO, Chief Financial Officer. My role is heavily focused upon financial strength of the business, both from an operating and from a strategic perspective. So a lot of a CFO's work really is about correct decision making, be it for immediate opportunities or for long-term strategic gain.
Sounds like a lot of moving parts to manage.
Just a few.
What does a typical day as CFO look like?
Sure. So a typical day for a CFO in my current position is really about interacting with finance team members. So at a CFO level, my task is to really come in and reinforce or correct their decision-making or thought process if they're not aligned with the vision of the company.
Brilliant. That gives us a really good foundation for the rest of the chat. From a financial perspective, what are the biggest challenges landlords are facing right now? Is it more cash flow, financing, tenant risk?
All of the above. These are difficult times for landlords, and one of the key considerations is cost of borrowing in Western markets, or let's say the UK market compared to other regions, where the UK's housing market is heavily predicated on raising debt and using leverage for acquisitions. The market and therefore landlords become very susceptible or sensitive toward cost of borrowing. If I'm an individual who is going to buy a property with my own equity, cash funds, as they would say, on the market, then I'm not sensitive toward interest rates. And we know that interest rates over the last few years have risen an unprecedented amount when compared to historically for 10 or 12 years prior. However, UK investors, landlords, and property owners do heavily rely on debt, making them a lot more sensitive to cost of rising debt. And as we know, we're in a high interest rate environment. And I think everyone's expectations now is that we will not see cost of borrowing being as low as it historically was. And that's something that landlords and property owners, even developers, need to factor in when looking at new opportunities, acquisitions, developments. So I would highlight interest rates being the obvious one, but there's lots of other things as well. For example, at the moment, we have a Labour government that is anti-landlord, I would say, but therefore making life more challenging for landlords, investors, and property entrepreneurs. Not to say that looking after tenants' well-being or tenants' rights isn't important, it absolutely is. But the local current government is putting a lot more pressure on landlords, whether it be the Renters Reform Act or putting in controls for rents, for example, or cutting funding for housing services through local authority budget cuts. These all create pressures that ultimately impact landlords.
Yeah, that's something we've heard quite a bit from landlords we work with. So if you are looking at a property or a block of flats, how do you figure out if it's worth investing in? And what are some of the key indicators, shall we say?
In Caridon, we focus, I would suggest, on two main metrics. One is yield on cost, which effectively is looking at your annual rental income against the total cost of the asset. We have a benchmark and a threshold above which we will consider a deal as viable. There are other factors that we also consider. So it's a more holistic approach towards investment appraisal rather than just one indicator. We also look at payback period. We have capital that has to rotate through deals and investments. And therefore, we look at what our payback period is. A longer payback period indicates to us that capital will be locked into the asset for a longer period, therefore creating a loss of opportunity for that capital in new deals.
I suppose that's especially relevant with the procurement work we're doing right now. So due diligence is everything.
Yeah, absolutely.
One thing that often surprises landlords is how we make our guaranteed rent model work. It sounds almost too good to be true to some people, but there's a lot of structure behind it. How does Caridon make guaranteed rent work financially? Is it risky?
So Caridon was one of the first companies to pioneer the idea of guaranteed rent, which essentially mitigates risk that would normally be associated to a landlord, because Caridon stand in the middle and underwrite for a profit margin. If you don't have efficiency, it's impossible to make guaranteed rent work. So for any landlord considering whether or not they should rent directly to a tenant or wants to build a portfolio, I think the questions they should be asking themselves is, what is their appetite for risk? What is their appetite for operational involvement? And ultimately, if they're looking for an opportunity to have safer, more long-term income, then Caridon as a guaranteed rent specialist is your best bet, because ultimately we have deep-rooted connections and knowledge and experience that an individual or a small portfolio landlord will not have.
Let's just unpack that a little bit. I think a lot of landlords still don't quite understand how we can offer that kind of certainty. Is there an example that you could walk us through?
So how does it work? We will offer a landlord a rent which is lower than the rent that we can collect, because we have to have a margin for error and a margin for profit. So on scale, if, for example, Caridon is collecting £1,200 from a tenant and offers the landlord £1,000, we have a £200 margin. For the margin, we undertake or underwrite the risk of non-payment, void, delayed payment, maintenance, etc. Now, if you have one or two properties, it can be a very risky strategy because you don't have an ability to diversify risk over a portfolio. Whereas Caridon, we have over 2,000 properties. That scale and diversity allows us to have sufficient coverage to enable us to always meet our rent commitments to landlords. And that's the peace of mind they have.
A lot of landlords still a bit confused about, guaranteed rent providers like us and a guaranteed rent insurance. Can you explain to our listeners what are the differences and how we offer a better deal at the end of the day for the landlord?
Yes. So insurance-backed guarantees effectively are insuring the risk at a premium for non-payment. However, from my interaction with those type of companies, I've never found them to be a viable option, because let's say there's a tenant in default. If the insurance-backed guarantee company says you have to lose the first 2 months worth of rent before the insurance pays, and then when the insurance pays, they'll take a £500 excess fee, the landlord's lost 2.5 months worth of rent. So even if you have the insurance come in at that point in time, you're already in a bad place. Whereas with Caridon, you're paying a premium which is built into the rent that we pay you. However, there is no lapse or no loss for you to incur. So there is no such situation where the tenant has not paid. You have to suffer loss and then we step in. No, we underwrite that risk. So we pay immediately on the month, every month, as per our guaranteed rent contract. without the owner having to wait a period of non-payment before being able to claim on the insurance policy.
Got it. That's why we always encourage the landlords to read the small print before they sign up with any deals. So that gives a really clear picture of how it works. I think for a lot of landlords, just knowing they'll get paid every month, no matter what, that peace of mind is massive, especially when the market feels volatile. And speaking of that unpredictability, what indicators do you keep an eye on that tell you when it's time to buy, sell, or simply hold tight?
So I think it's about being in tune with the market and seeing and monitoring things like macroeconomic factors such as interest rates, looking at local and central government, looking at statistics and data with rent demand, rent costs, mortgage costs, availability of capital. So I would say there is no one direct answer, but I think it's about monitoring all those indicators to give you a sense and feel. So in terms of property acquisitions and property purchases, there isn't never really a bad time to buy, in my opinion. Because if you have the ability to hold the asset for the long term, the asset will always be worth more in the future. I know we've been buying properties for 20 years, maybe 25 years. There isn't a property today that is worth less than it was 25 years ago. Fact. So for people that want to get on the property ladder or buy investment properties, people ask me all the time, is it the right time to buy? For me, yesterday was probably the right time to buy.
That's really interesting. Do you personally tend to rely more on gut instinct or data in those moments?
I'm the CFO, so it's always data driven. No, I think to give you a serious answer and touch upon the point I always made, of course, I'm not saying or suggesting that you should blindly buy property. Due diligence is very important, and your sense and how you feel. There are, of course, times when it's better to buy and not as good to buy. So, for example, people say when the market is down is the best time to buy, which makes absolute sense. But in practical terms, it's never easy to buy when the market is down because you don't know how much further down it can go. And when the market is down, it's difficult to buy property because there isn't confidence in the market. So unless you have the ability to switch off emotion, switch off fear, switch off concern, and assess the bottom of the market, which is not easy to do, you will find that there are those peaks and troughs in the market. So for me, diligence is important, and assessing your own financial ability and capabilities and appetite for risk is also important. And it's different for everyone, but investing generally is a good idea for the long term.
Thank you for that. What's your view on interest rates this year? And more importantly, how should landlords be planning around them?
So I, of course, keep an eye on the media, the news, the sentiment from central governments and central banks. And the sentiment currently is that we expect interest rates to fall in the UK by maybe 1/4 or 0.5% more this year, which I think would be welcoming news for investors, landlords. And I think what it will do is inspire more confidence in the market and improve activity in the market. However, over the last couple of years, lots of people, companies like ourselves have fixed our debt. So now there isn't a direct impact on our current portfolio when interest rates go down. What it does is it makes it more viable or attractive for us to make new investments because the borrowing that we'll secure against the next investment we'll make will be cheaper than the last deal we did 6 months ago because the interest rate was higher then.
Thank you. So really, it's about being prepared for different scenarios rather than trying to predict the market perfectly. Let's zoom in on some practical takeaways here. We've got a lot of landlords who listen in for this bit. What's one financial mistake you see landlords make again and again?
I think the mistake that landlords make quite often is underestimating risk and cost. So if you have appetite to do a deal, you can sometimes chase the best case scenario. I will get this rent and I'll rent the property. I'll refurbish it in a month and it'll be rented a week later and I'm going to get £1,500 rent. That side of an individual's appetite to want to buy and invest can sometimes overtake the cautious side of landlords who say, maybe it won't take 3 months to refurbish. Maybe it'll take 6 months. Maybe I won't get £1,500 rent. I might get £1,200. Maybe the property will be empty for 2 months and maybe I'll have to pay a management fee to someone to let it. When you take those factors into consideration an individual may find that the return that they're netting from that asset is not as good as they anticipated. And I think landlords should just be cautious and just keep that in mind, that they should have a second appraisal that has a more prudent assumption base. If the deal is still appetizing based on the more prudent assumptions and it still works for them and meets their criteria and their investment thesis, then absolutely they should proceed.
Do you think that's usually down to full advice or just inexperience?
I think inexperience. I think because the more deals you do, the more information you carry into your next deal. So with more information, you make less mistakes. So if I'm looking at the first refurbishment I had to quote, I would have been well off because I had never done it before. I didn't really know what it's going to cost. I had an idea. I did some due diligence, but physically on the ground, I hadn't gone through that cycle. However, having done 1,000 refurbishments or upgrades or developments now, it does get easier to appraise and assess costs, timelines, challenges. But that said, no matter how experienced you are, there is always some unknown. And that's the essence of investing. Investing is about risk and reward. And I suppose how do you mitigate risk is about knowledge and expertise.
Right. If you were starting a buy-to-let portfolio today, what would you do differently to, let's say, 5 years ago?
I don't think I'll do anything differently because we've always been innovative. And I think that's the operative word, really. In today's market, I have to say that it's harder than it was 15 or 20 years ago because there's so much more information and knowledge and competition in the market than there was 20 years ago. So it's more difficult. So you need to know what you're doing. You need to be innovative with your approach. There are so many different housing models, so many rental models out there, and you can be vanilla and you can just say, I'm going to do PRS. It's very safe, but the income and return on your investment is low because it reflects the safety and the lack of risk involved. If you have appetite for higher income, then you either have to be hands-on or you have to take some risk with a more dynamic rental model.
Got it. And just a quick one before we wrap up. We've heard a lot of chatter about Dubai. Some listeners might not know this. You've relocated your whole family to Dubai. When was that?
It's coming up to 2 years. August 23 is when I officially moved to Dubai. I was obviously planning a few years prior because I had to buy a property. As you mentioned, I took my whole family there. So there's obviously quite a lot of infrastructure to manage in terms of homes, schools, and such like. So yeah, it was a couple of years in the making, and then 2 years since have flown by. I'm now a happy Dubai resident.
Do you think there are real investment opportunities for UK-based landlords or investors there? If so, could you give us a quick overview? And maybe we can explore that fully in a future episode.
Sure. So look, the Dubai real estate market is booming. There's a great energy. The real estate values are fundamentally dependent upon a demand-supply imbalance. So some would argue that there is lots of development happening, and as such, that's not good for the real estate market. However, my view is that there is such a momentum of individuals and companies relocating to Dubai, even though there's far more new buildings and new stock coming to the market when compared to previous years, it's still not at a level that's going to satisfy the demand of people moving to Dubai. And I guess the question people ask is, well, what if people stop moving to Dubai? And then that's where your risk assessment of the likelihood of that happening is. I've lived there for 2 years and I can see the number of people and a wide variety of people that are moving to Dubai from Western countries, whether it's Italy, Spain, Germany, France, England, Russia, Ukraine, etc. There is a continuous flow of individuals coming into Dubai. And I don't see that slowing down or stopping because ultimately it's snowballing, because the more people you know that have gone to Dubai makes that transition for the next person easier. You know, I was able to move to Dubai knowing I had few friends there. The next generation of people will have more friends there, more infrastructure, more community, more job opportunities. And as long as the leadership keeps doing what it does, Dubai will continue to strive and real estate will continue to be a massive investment opportunity. There is great belief in the leadership in Dubai. They lead with conviction, great direction, and an entrepreneurial spirit, which feeds into the city itself and the people. I think sometimes people depict Dubai as just a flashy place where rich high fly people go. It's not the case. There's a massive amount of working class individuals in Dubai going out there, not because they've made it, because they want to make it. And they see Dubai as a place that they can go and actually make it. Of course, any investment in any region of the world requires careful consideration, due diligence, and knowledge. And I think where Caridon can assist individuals, hopefully in the future, is with that knowledge gap, because it's very difficult to go into a new region, a new area, a new culture where you don't quite understand the mechanics of things, the locations, areas, the dynamics. So watch this space for the future.
Abbas, that's really insightful conversation. Thanks so much for taking the time. For anyone who wants to stay connected with you, where's the best place to follow your line?
I'm not big on social media, so LinkedIn is probably the place to find me.
And of course, don't forget to subscribe to our mailing list for more deep dives and property tips. And just a quick reminder, if you're a landlord looking to explore how guaranteed rent can work for your portfolio, or if you're thinking selling blocks or portfolios, head over to caridonestate.co.uk. We'd love to hear from you. Bye. See you next week.